Welcome to First Mover, this special edition of Consensus, your midday global look at the action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Consensus Day 3 is underway, and we have some big news, some big guests who have been added to the roster. Tom Brady and SBF, Sam Bankman-Fried, the CEO of FTX, are speaking at Consensus Thursday night at 8 p.m. Are you a Buccaneers fan, Lawrence?
I'm very, very happy about Tom Brady. He makes Gen Xers really proud. He's also made me a little bit of money, just saying.
Yeah, he made a tweet. Let's take a look at the, yeah. Tom Brady, Sam Bankman-Fried saying, hey, Tom Brady, first laser eyes and you're buying the dip. I'm talking at Consensus 2021 Thursday night if you want to join me. And Tom Brady chiming in, let's do it. DM me the details later.
Yeah, that's amazing. It's just amazing. He's the greatest football player ever lived. You can't get better than Tom Brady, seriously.
Yeah.
And he's a Gen Xer. We did it.
SBF, Emily.
Yeah. No, even I have absolutely nothing insightful to say about sports, but I recognize that this is a huge deal.
Yeah.
It's going to be a big holiday in my household. Let's just say that.
I've also got a panel coming up. MasterCard and Gemini are joining me for financial products. We're going to have a whole discussion on it for the masses at 4:30 p.m. But checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently at $39,258. Bitcoin is up almost 5% over the past 24 hours. And the CoinDesk Ether price, ETX index, right now coming in at $27.57. ETH is up almost 7.5% over the past 24 hours. The crypto markets are all green. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So it's already been a jam-packed morning at Consensus with updates and presentations from Polygon and Bitcoin Core on the foundation stage. And on the exploration stage, deep dives and fascinating discussions on central bank and digital currencies and monetary innovation. Let's have a listen to what PwC's Henry Arslanian had to say.
But probably the most developed and most commonly followed model right now is the two-tiered system, where the central bank issues a kind of digital currency, a CBDC, but the distribution and all the process of it happens via the existing commercial banks or other financial institutions. This is what the Bahamas has been doing, this is what China has been doing, and many other central banks have been exploring this model. Why? Because it allows the public to have access to a third form of central bank money, but at the same time, from a financial stability perspective, does not really change the status quo, keeps the banks in place. And although there's not much upside for the banks, frankly, I'm actually surprised to see that the banks have not been more actively lobbying against CBDC because there's really no upside for them. It's additional costs. They need to be able to ensure the compliance. Operationally, there's a lot of costs and not much upside. This is actually the model from a financial stability perspective, leaves the banks in place.
That was Henry Arslanian of PwC. Emily, it's interesting to see the ball rolling on this CBDC discussion.
Yeah, I think one of the great things about this consensus is that we actually start to see some technical details about how CBDCs might work. But, he raises a very interesting question about how banks are going to react to this, right? Because banks are going to be deeply affected by the rise of CBDCs, and it's unclear if this is something that banks are really going to support.
Right. And there's so many technical details to get through, from how are you tracking data? How are they preserving privacy, right, Lawrence?
Yeah, among other things, of course, you can limit, potentially you could limit how and where your central bank digital currency gets spent, and all sorts of issues with, basically having surveillance money in your pocket in the form of a digital currency on your phone. So there's a lot to be had here.
Surveillance money, scary thought. But our next guest has been a major influence on the crypto industry. This month, he took the position of CEO at Binance U.S. after a short but impactful tenure at the Office of the Comptroller of the Currency. Joining us now is Brian Brooks. Welcome, Brian.
Hey, Christine. Thanks for having me.
So, we just brought up central bank digital currencies. How do you were involved with the OCC. How have those discussions evolved in your view?
Well, I think in the U.S., they're more of a discussion than a reality, to be quite honest. I gave a talk yesterday. There was a poll asked of all the participants as to when they thought the U.S. would launch a CBDC. Did they think it was going to be A, in 2022, B, 2023 to 25, C, never? Only 5% of the people said never, but I'm going to put my money on never as the actual time. That's just not what we do in this country, is have the government build innovative structures. So even though there's a whole discussion about the idea that people ought to have individual accounts at the Fed and CBDCs are the way to do that, at the end of the day, if you look at the explosion of dollar-backed stablecoins, even just over the last couple of weeks, it shows me that in America, people still want innovative, bespoke products. They want the kind of cool customer experience that you get when technology is unleashed and offers you many options. The idea of funneling everybody into the Fed, for a CBDC feels a lot to me like asking people to go back to the post office. I just don't think that's the American way. It's clearly the Chinese way, but I don't think we're going to see that in this country, is my prediction. A lot of talk, less action.
So, Brian, welcome back. Speaking of that innovation, the guy who now has your old job at this OCC, Michael Hsu, said he's going to be reviewing some of the approvals he made for crypto companies. Senator Brown from Ohio singled out the approval for Paxos, Protego, and Anchorage. What do you think is motivating them? Is it because you were appointed by President Trump? Is it personal? Is it something you expect? How do you feel about it?
Yeah, well, I sleep well at night, so I don't take any of this stuff personally. I think there are a couple things going on. Okay, so one is we have gotten to a place in this country whenever one party is elected, the first thing they do is try and undo every single thing the other side said. So my line is, if I had cured malaria, they would have tried to put it back in place, because there's just that level of partisanship, and I think on the Hill in particular, that's what you're seeing. But the truth of the matter is, I think that my successor is a very smart guy, a relatively down the middle guy. And what he said in his testimony was, look, a lot of these changes are here to stay. They can't be stopped. And he just wants to get his handle on what's important and what's risky from his party's view of the world. And so I think it remains to be seen where that goes. But I've had good dialogue with him thus far, and I'm optimistic that the most important things we did will stay in place. I think pushing this stuff out of the banking system would be a really strange thing to do, especially for Democrats, because pushing it out of the banking system reinforces the power of the incumbent banks over the individual people who benefit from decentralization. So it's hard to believe that's the outcome.
Brian, it's always great to have you on the show. Just to talk a little bit about the elephant in the room, which is Elon Musk. He's obviously very controversial. Some people like his tweets, some people don't. People blame him for crashing Bitcoin's price. But just from a legal regulatory point of view, is there a chance that what he is doing tweeting and his tweets leading to dramatic rises and falls in Bitcoin or Dogecoin, and as we know that he has a deep investment in Bitcoin, is there any chance that he could actually be accused of doing something illegal or of market manipulation?
Well, who can say? I am sure that he's surrounded by great lawyers. There's always the question of whether he always listens to the great lawyers. But that would depend a lot on what he's doing after he tweets. If you tweet and push the price down and then you buy that dip that you created, that would be a big problem. Hard to believe he's doing that. I think just seeing his public personality, I think it's more like he's a guy having a fun time with his influence and seeing how the world reacts to what he does. But if he's making money from this, that would be a problem.
So I guess the other way to look at it is that, so there's that, is he profiting from this, right? But, say there's at some point you have all these ordinary investors losing their life savings in Dogecoin and, they blame Elon Musk, right? Isn't that going to attract unwanted attention from regulators?
Well, I mean, from my perspective, it certainly will, because I think everybody who's on the program right now agrees that what we're trying to build here is a fundamentally new technology paradigm for not just finance, but for a lot of human interaction here. And anytime you shine a spotlight on some of these fringe markets or some of these kind of novelty items, and it looks like people are losing their shirt, usually what happens is regulatory overreaction. So what we don't want is a panic over Dogecoin prices to kill Bitcoin or ETH or some of the really fundamental innovations that are going on here. So I really hope that doesn't happen. And especially when I saw the news of Elon and Saylor coming together around this Bitcoin mining council, and I don't know if that's a good thing or a bad thing, it shows they plan to be in the space for the long haul. So hopefully they'll agree with me that we need to build some community around this by focusing on the foundational technologies and not focusing attention on, fringe short-term price movements that are resulting in people, having pump and dump type of experiences.
Just really quickly, what would a potential regulatory overreaction look like? Like, what's sort of the worst case scenario here?
Well, I mean, I'm assuming we all read the Wall Street Journal editorial page today where, a respected thinker just flat out called for banning Bitcoin. I've said before, I think that's ridiculous. I mean, $2 trillion asset markets usually don't go away, but there's a drumbeat for that kind of thing. And what I do worry about is, there's a war of political ideologies out there where right now the ascendant ideology is capitalism is less good than government. And if government's going to try and either crowd out or prohibit or ring fence, crypto, that's a problem. It's a problem for the future freedom that we envision created by decentralization. So I think there are a lot of ways that could happen. I think at this point, we're too far down the pike for that. I always make my Uber analogy that at a certain point, too many people were using it for the local taxi cab commissions to stop it, even though they tried. But you never know. And this is a time of one party rule. So there are not a lot of checks and balances if the government dominated impulse succeeds.
Brian, if it's found that Elon Musk has been pushing around prices of Bitcoin, or at least tweeting about it to cause a bit of a panic, so that miners, let's say, buy credits from him, buy solar panels or such things, putting your old regulatory hat on, do you think you would see, for instance, the FTC involved in regulating things like Bitcoin just because of its the ancillary effects of it?
Yeah, I mean, look, I don't see that leading to regulation of Bitcoin versus regulating the person who's doing all of those things. I mean, the CFTC, many people don't know, does actually have market manipulation authority over spot market manipulation. So they don't regulate cash spot markets per se, but if you're engaged in fraud or manipulation of cash spot markets, they have enforcement authority over those things. And so if it turned out the way that you're describing, if this is all a commercial enterprise on his part, and I'm not saying it is, it's hard to believe it is, but that, again, that would be an issue. I think the optimistic case here, though, everybody, is that he's now signaling he's in it for the long haul. And one of the things that caused the big crash last week was the belief that he was getting out. So if he's going to be in it for the long haul, if Tom Brady's going to be in it, right, we're talking about people who are themselves institutions at some level. And, in that sense, I kind of welcome their involvement. Better to have more people on chain with us debating within the community than to have people criticizing outside.
Well, Brian, thank you very much for joining us this morning. Very sound critique of the crypto space at the moment.
Great to be here. Thanks, everybody. Look forward to seeing you at the consensus.
All right. That was Binance U.S. CEO Brian Brooks. You can hear more from Brian. He will be sitting down with CoinDesk's Nick Day at Consensus tomorrow for an in-depth discussion on regulation. Right, coming up after the break, a Harvard professor teams up with Grammy-nominated musician Akon's NFT platform for the world's first DNA NFT. Welcome back to First Mover, the Consensus Edition, checking in on Bitcoin. The CoinDesk Bitcoin price XBX index is currently at 38,750. Bitcoin is up about 2.4% over the past 24 hours, and the CoinDesk Ether price ETX index right now trading at 27.33. ETH is also up about 4.2% over the past 24 hours. All right, Harvard Medical School professor George Church, Nebula Genomics, Oasis Labs, Grammy-nominated artist Akon and Acoin NFT are coming together to launch the world's first genomic NFT. Joining us now is Fauvre-Willis, CEO of Oasis Labs, and Kamal Obbad, CEO and co-founder of Nebula Genomics. Welcome, Anne and Kamal.
Yeah, thanks. Really happy to be here.
Great to have you. All right, so genomic NFT, you're turning your DNA into an NFT. Why in the world would anyone want to do this?
Yeah, so yeah, sure. Yeah, it's a good question. So we've had this conversation about how we can enable our users to fairly and transparently share their data with researchers for years now. So when we started Nebula, we had the vision of building a trustless and decentralized data sharing network for health and genomic data. And this really comes from Dr. George Church's vision from years ago when he started the Personal Genome Project, which is effectively an open source database where people can contribute health data and share it with researchers. So we found that NFTs can be a really compelling and potentially interesting use case for monetizing and sharing genomic data as a digital asset, which has become very valuable over the past 5-10 years. It's become more mainstream for researchers to use.
Right. How will this information be used? And things get hacked all the time. Is this to pose a danger to people with very private information in these DNA NFTs?
Yeah, so what we're trying to do is give people complete control over their data. So if they choose to share it, they can do so in a way that's transparent, and they can audit who has access to it, and they can potentially make some money off of it as well. So what happens today, and most people don't realize that, is when you buy a genetic test from a personal genomics company, it's frequently already being monetized and shared with researchers. So about 40 million people in the US have done some sort of consumer genetic test. We want to shift the model from where it's not transparent and it's not privacy preserving to share data with researchers, to a way that the patient comes first. So they can engage directly with researchers. They can choose to share their genomic data in a way that they're fairly compensated and in a way that's transparent. And even more importantly, they can choose to share additional data with researchers, which is what really our mission is building a higher engagement, higher efficacy way for patients to contribute data to research and help power medical breakthroughs.
So it's not immediately obvious. What is the role of Acon in this project, or Acoin in this project?
Yeah, so we've known some of the people who work at Acoin for a while now, and they're launching an NFT project. So they're doing a bunch of high-profile NFT launches throughout the summer. So they're very interested in what we're doing with George. So we're starting this partnership with them to essentially build awareness. And Acon and the Acoin team have a broad platform, so we're excited to partner with them on this specific launch. Since today we're really just doing Dr. George Church's genome, but this is possibly something we'll roll out to all of the users at Nebula, tens of thousands of people who've bought genetic testing through us.
So, echoing a little bit of what Christina was asking here, there's a fear that genetic data can ultimately dictate things such as insurance coverage, and what kind of, what happens to a patient in a hospital and what they can do. And why should data be allowed to float around the blockchain where it could be traded?
Yeah, so go ahead, Anne.
Oh, sorry. Yeah. I think it's an interesting question. I think, honestly, that's one of the reasons that we've worked with Nebula and with Acoin on this as well, is we think that by making it an NFT, what you're really doing is tokenizing that data and giving the individual user who owns it control of that data. And so instead of it being sort of shepherded or sold as it is on any Web 2 market now, we're actually giving users back control of their data. Now, the nice reason, and one of the reasons that Oasis Labs is involved in this as well, is we are a privacy-first blockchain application layer, and we build on the Oasis network, which is a privacy-first network. And so what that means is folks can hold their NFT of their genomic data and then store it in a private and confidential way. So information really isn't flowing openly and freely, but really is, we're putting the power back in the hands of the individual as opposed to these large institutions.
Wouldn't the easiest way just to be that no one creates an NFT to begin with, or submit their genetic data, or does so judiciously, such as with their doctors directly, and not, let's say, one of these companies?
Yeah,
so I think
Go ahead.
Anne?
I was just gonna add. So there is utility to getting today. There's a lot of benefits that patients can receive by doing whole genome sequencing or genotyping or doing like a standard 23andMe test. The issue is the way that data is being shared today isn't very transparent. But here at Nebula and Oasis, we don't want to disincentivize data sharing. So it's important to share that data with researchers. That's what's powering the personal genomics revolution. That's what's powering personalized medicine. That's what's powering therapeutic development. But we think there needs to be a more transparent way to share that data, and the incentives need to be aligned. So we're not trying to pitch to patients and customers of these consumer genetic testing businesses that they shouldn't be sharing their data. We think they should be, but they should be doing it in a way that's more secure, more privacy preserving, and enables them, which hasn't been the case today.
And just to follow up on this privacy issue, so privacy is obviously one concern, right? But I mean, the other part is just actually convincing people that it is private, which is another matter. But there's also this issue of, one of the big selling points of blockchain is immutability, right? Like once something's on a blockchain, it can't be changed, it can't be altered, it can't be removed. And for me, that raises a lot of tricky questions when it comes to medical data, because sometimes, or medical or genetic data rather, because sometimes things, information is wrong, right? Like there are mistakes made. And then what happens in that case, right? If something is an error and then is it just there forever? I mean, is there any way to reverse that? Because the whole idea of blockchain technology is that you can't.
Yeah, I think it's a question of what you're storing to the ledger. And so in the instance of the way our network works and the way we work with Nebula, the information itself is held in a confidential way, basically at a compute layer of the network. And then what's being sent to the immutable ledger, the consensus layer of the network, is some record that data exists and is being held. So the data itself is not being shared. It's actually the record that it exists. So for example, what you'd be able to track with an immutable ledger is who had access to it, who you gave access to. And then if you wanted to pull back control of your genome, that would be tracked as well on the ledger. And so in that way, what we're really doing is tracking at this at the public layer where the information is being sent and shared, not the information itself. And that means that you can add more data, more information in a confidential way without actually running into the issues that you're talking about.
Maybe you could walk us through some specific use cases of how this would work.
Yeah, so one particular use case is, for instance, if you are a rare disease patient and you want to contribute your data to rare disease researchers. So historically, one of the big challenges for rare diseases is that it's very difficult to recruit patients and collect data to actually do therapeutic development, to the point where it's too expensive to make cures for these diseases. So you can envision a use case where a rare disease community comes together and licenses and gives access to their genomic data to relevant researchers in return for compensation or whatever they might want. So that's one very specific use case for how someone can contribute their data to research. And we're seeing a big movement of patient empowerment where patients are organizing together and building biobanks and data banks and trying to get researchers organized around developing cures for their diseases.
Is the problem, and is the problem in the United States that there is no, for instance, method by which medical data, for instance, is centralized, where people can see, for instance, in countries like Israel, where there was they basically ran an entire trial on COVID vaccines and could map out the morbidities in that country, because they had basically centralized or very few databases out there which gathered the entire population's medical history and were able to see how they reacted to the vaccines. Does that kind of a method, which other countries have, doesn't exist in the U.S.? Are you filling a vacuum that in the U.S.? And what are the threats that if the U.S. ever gets around to doing something like that, where in the case of that, whereas private HMOs had that data, where the U.S. eventually goes to that system, what then is the benefit of something like this?
Yeah, I'd say there would be significant benefit in having data in general be more accessible to researchers at scale, right? And so I think the example that you raise in Israel is a great example of that. Now, there's a ton of risks that go along with that, including at a core level, do you trust your government to hold that data in a way that you think is safe? And so one of the things that is so compelling and beneficial about blockchain networks and combining that with privacy technology is it allows us to create large databases where individuals are feeding information into the system, but retaining control of it. And at the same time, protecting that information. So setting access and controls around, for example, I'd like researchers to access my health data, but not a pharmaceutical company or not the government. And so setting some control and restrictions around that can be very beneficial. I think so in that way, it's not as simple as having the government have a database or not. There's clearly a significant number of concerns and privacy issues that would go along with that we're seeing really be debated now, even in things as simple as vaccine passports and whether there's a registry there. So, we do believe that blockchain technology coupled with privacy technology can really unlock something new. And that's really the thesis of what Oasis has been working on for the last few years.
And Kamal, thank you so much for joining us. Interesting project. Really interested to see how it develops.
Thank you.
All right, that was Fauvre-Willis, CEO of Oasis Labs, and Kamal Obbad, CEO of Nebula Genomics. Next, we have Chair of Filecoin Foundation and General Counsel at Protocol Labs, Marta Belcher, joining us. Through her work, she looks at civil liberties issues related to blockchain and decentralization. Welcome, Marta.
Thank you so much for having me. I'm excited to be here.
Good to have you, Marta. Well, first off, can you perhaps give us an introduction to Filecoin, perhaps offer some use case examples to help our audience understand what it is and how it works?
Sure, absolutely. So, one of the coolest things, of course, about blockchain is that it allows you to effectively program your money. And a lot of people have talked about Filecoin as effectively Airbnb for file storage. So the idea here is that you can take your files, put them on other people's hardware, and pay people for storing those files. The reason that's important is because it adds an incentive layer to the decentralized web. So, the same team had previously built IPFS, which is a decentralized storage network, and that's great, but it didn't have the incentives to keep these files on the network. So if someone is storing a file and they close up their hardware, they close their computer for a few days, that file just goes away. It isn't on the network anymore. So we need this incentive layer in order to enable us to ensure that information is persisting on the network.
Good morning. What are some of the legal and regulatory issues that Filecoin might face? Because I assume that some of the issues that you would personally be looking at.
Yeah, so it's interesting. I wear several hats. One of my hats is actually that I'm special counsel at the Electronic Frontier Foundation, and then I'm also board chair of the Filecoin Foundation. And so in those roles, I focus a lot on privacy and civil liberties and issues involving cryptocurrency and surveillance. And so those are issues that I think everyone in the crypto space should care deeply about, because I think increasingly in the past year we've been seeing regulators around the world really increasing financial surveillance, and they've really it's really been a push to take the surveillance of the traditional banking system and apply it to cryptocurrency. So that's something I'm thinking a lot about, and that I'm spending a lot of time personally working on.
So I guess on that note, we've been talking a lot about central bank digital currencies and, the potential for surveillance or privacy. How much are you concerned about that? And is it possible for the U.S. to issue a digital dollar that really protects privacy and doesn't get into the sort of surveillance business?
I'm very concerned about that. Actually, I think central bank digital currencies, when I think about them, I think about this photo that came out of the Hong Kong protests. There are these pictures, and there are all these protesters lined up in subway stations. And they're in these long lines because they want to buy their tickets to the train in cash. And to me, that really underscores that a surveillance society is one in which there is no cash, where you have your financial transactions tracking you, and where if the government can see that you bought a train ticket here, and so we know you were at the scene of the protest. And so for me, that really underscores this idea that having all of these transactions recorded and available to the government is very potentially concerning for civil liberties. So I'm very concerned about CBDCs from a privacy and civil liberties perspective, and definitely worried about giving that type of financial data to the government by default, which is something that unfortunately has been increasingly what the government has been pushing for.
So one of the things that you have in Europe is the right to be forgotten. How does Filecoin deal with that? In other words, the ability to have your name not appear in certain searches and the like. It's something that doesn't necessarily exist in the United States and can cause reputational harm and the like. And it's one of the reasons why Europe has implemented it. So if the world were to all of a sudden go to Filecoin tomorrow, what happens then?
Yeah, so content moderation issues are huge today in all over the internet, Web 2 and Web 3, and we actually have a really interesting approach to it. So there's an organization called Murmuration Labs that is basically like the content policy shop for the decentralized web, run by Alex Fierst, the former general counsel of Medium and an expert in the content policy space. And Murmuration Labs is building tools on top of Filecoin that actually allow for decentralized content moderation. So you can do the same content moderation that you would be doing, on a Facebook or a Twitter, but instead of some central intermediary making those decisions are decentralized at a node by node level. And so it's taking this content moderation and actually putting it into the hands of a bunch of individual users, node operators, and taking this content moderation and scaling it in a way that works for the decentralized web. So we're doing a lot of really interesting and cool.
But if it goes to a decentralized situation versus a court, isn't it going to be much harder for people to, for instance, protect their reputation, or companies to protect their reputation, and basically the ability to counter slander?
So right now on Web 2, if you want to go take something down, there isn't necessarily one central intermediary that you are sending the takedown to, because content is on all sorts of different platforms, right? And so this is sort of a similar system in which there are many different nodes, and you have the ability to contact individual node operators. However, the thing that's really cool about the tools that we're building is it gives you the ability to actually create and curate lists that node operators are subscribing to and gateway operators are subscribing to. And so you can have a list that says, that is sort of populated with content, and you can have node operators and gateway operators subscribe to these lists, which enables them to automatically block the content that's on those lists. So it's actually a really interesting way of doing content moderation. And it works in large part because the way that IPFS works is that content is all identified by a content ID rather than by its location. So on Web 2, you have to go to a specific location on the web in order to have that website, that content served to you. Whereas in IPFS, you just need to know the content ID and you can get to that particular content. So it's a different set of restraints that actually allows for a much more interesting way of doing decentralized content moderation.
Marta, yesterday we spoke to Dfinity. They are also launching a decentralized blockchain or internet computer. I wonder how Filecoin differentiates itself from other competitors out there.
Yeah, I think the Filecoin network right now, it's been a long time coming, and we had a really terrific launch back in October. We're now up over 4 exabytes of data available on our storage network, and I think that Filecoin is very exciting because it builds on top of IPFS and is something that really adds an incentive layer to this technology that's been around now for 6 years plus. So very excited about where we are network-wise and where we're going in the future.
With all the interest in ESGs and the problem of energy usage, is Filecoin getting a lot of attention right now? What's going on there?
Well, no, Chia's getting a lot of attention right now. I think in terms of energy usage, that's definitely something that's really interesting and an important part of the discourse today. When it comes to coins that are energy inefficient, I think we're lucky to not be one of the ones that's in the headlines these days. We're not bricking any hard drives, which is great. So that is.
But is there a concern in the design of tokenization, blockchain technology, that these servers, these nodes that are created, do use an exorbitant amount of energy? Is that a concern taken into the design of the network?
Yeah, I think it's interesting because it's a big part of the scalability of the network as well. We've seen these big changes with ETH just in the past days to become more energy efficient. And I think it's something that for the entire blockchain space is really important for scalability and really important also, I think, from a legal and regulatory perspective. We're really seeing just in the last couple of weeks that regulators all over the world really care about this, and that it's a potentially, important problem, not just for the scalability of the network, but also for the messaging to the public and to regulators.
All right. Well, Marta, thank you so much for joining us and sharing your thoughts on Filecoin today.
Thank you so much.
That was the chair of Filecoin, the foundation, Marta Belcher. She will be speaking at Consensus 2021. For more information on that and all of our other amazing speakers, go to events.coindesk.com. And CDTV's Consensus sponsor, Crypto.com, commissioned a report from the Economist Intelligence Unit exploring customer trust with digital payments. Joining us now is Crypto.com's Chief Operating Officer, Eric Anziani, to tell us more. Welcome, Eric.
Good morning, Christine. Thanks for having me.
Good to have you, Eric. So would love to hear about some of your key findings, and I believe that you're revealing them for the first time on the show.
Yes, that is correct. We're very excited to share the results of this is the second annual report we do with the Economist Intelligence Unit, and really trying to explore, as you mentioned, digital currency demand, usage, and what are the barriers that may exist to make our society a little bit more digital and cashless. So we talked with about 3,000 consumers globally in developed and developing markets, as well as this year, 200 institutional investors, as well as corporate treasury management representatives. So if we deep dive into the insights, I can share maybe 3 key insights that we got from the report. First of all, digital currency adoption is clearly on the rise. And we've seen 2 key factors driving that, COVID-19 and, in general, the increased awareness around CBDCs. So it was an overwhelming response. Almost, I think, 8 out of 10 respondents really said that COVID-19 has accelerated demand and adoption for digital currency. I think the pandemic has been, I would say, a form of impetus for greater digitalization across our societies. We've seen a lot more individuals expecting their country to become fully cashless, maybe within a year or 2, compared to our previous reports. And interestingly, we're looking at the numbers, the role or the perceived role of government in driving digital currency adoption has increased significantly. It was almost 11 percentage points compared to last year. And we feel it's CBDC being in the news cycle, it's giving that prominent role for government and regulators and central bank to move forward societies in the digital space.
So, Eric, good morning. Your survey indicated that there's a difference in attitude from the developed and developing countries. towards going cashless. And it seems to be, I guess it's that the people in developing countries are more resistant to it. Why is that? Why are the attitudes different? Specifically, I mean, have you been able to drill down to what causes that reluctance?
Well, I have to say, if you look on the developing market side, it's primarily because of the leapfrog of the technology, everybody being on mobile and haven't not gone through the legacy system that we have in developed markets and the traditional methods of payments. It's leapfrog directly to digital payments. That's one. And I think as well, especially when we talk about cryptocurrencies, the hedge against inflation, especially in markets where the currencies are very volatile, has proven to be a very strong use case for cryptocurrency and their acceptance there.
Was there anything in the report that you particularly found surprising or counterintuitive or just different from what you had expected?
I have to say the digital gold narrative is still actually very prevalent in institutions. It's the first time we're really serving a large number of institutions. And I was expecting maybe a little bit more around the means of payments or the use of crypto as currency. I think most of the institutions see that use case, but their first instinct and purchase and actions are really related to diversification of their portfolio or their treasury account and hedging against traditional instruments. So I think the payment part is really more on the retail mindset at this stage, and we're seeing more store of value, digital gold for institutions.
So Eric, what's the next step? What are the action points here based on the conclusion of the survey? What do you think should be done next?
Well, it's overall positive to see the progress as I think the subtitle of the reports, from fear to inflection. I think we're really seeing that journey in the awareness and the adoption of digital currency, but we're far from mass adoption. And you look at crypto in particular, we have today about 120 million users. How do we move to 500 million, a billion users? And in the survey, we did ask those questions around, what are still the barriers for more adoption? And when we look at it, there was major themes around trust and safety, also lack of understanding, especially on the consumer side, and things that are very pragmatic, knowing where to buy crypto safely. So when we look at these results, first, there's two major kind of next steps. One is, of course, education. I think as an industry and as Crypto.com, we have a big role to play to educate both individuals and institutions and drive more awareness about the blockchain technology, its benefits, how it can improve societies. And then second, beyond education, which is fundamental, we still need to continue to focus on solving real world use case and improving people's life by using the blockchain tech. Because this is what we do at our core at Crypto.com. It's solving people's needs and helping and empower them and give them the tools to have control over their own growth and their own destiny.
What's the easiest way for people to get into that trust aspect, to overcome those trust fears?
Yeah, so I think there's a few parameters there. When you look at which platform to go in, it's very important to understand what type of certification they have received, the type of licenses they have received, the team, and their track record as well. And so we are, if you look at Crypto.com, we have the highest level of cybersecurity and data privacy certification, ISO, PCI DSS, NIST as well. And we've been getting more and more licenses across the globe. More recently in Europe, we're the first company to have a VFA Class 3 crypto license. So those are indicators for users and people that are entering the space that there is a notion of trust, and people are investing in those fundamentals like compliance and security to establish that trust.
You touched upon this earlier. Bitcoin, first cryptocurrency, was supposed to be a electronic cash, and there institutional investors claim that they have a preference for transactional use, but we see likes of MicroStrategy turning Bitcoin to a store of value. What does this tell you about digital currencies in the current day?
I think we're quite lucky in the digital currency space in our industry. There is so many different protocols and currency, and they will serve different purposes. If we look, for example, at a currency that have fast finality, low fees, that are scalable, then they're a little bit more fit for payments. And we'll see that they'll drive a lot of action on that front. If we look, for example, at our crypto.org chain project, it was really built with the payment mindset, and the consensus and how we looked at fee and scalability was designed that way. Bitcoin is not exactly built for that. There are ways to use it for payments, and I think we see some flow going on that front. But it has its very strong power in terms of security and store of value. And so there will be different coins, different protocols that will serve different purposes.
All right, Eric. Appreciate your time. Thanks for joining us and sharing the details of your results on this Crypto.com report.
Thank you for having me.
Right, that was Eric Anziani, Chief Operating Officer at Crypto.com. All right, our next company has 2 new ways for institutional investors to gain exposure to cryptocurrencies. Joining us now is Carlos Domingo, CEO of Securitize. Welcome to the show, Carlos.
Hi, good morning. Thanks for having me.
All right, so you're launching 2 cryptocurrency yield funds, one called Securitize Capital BTC Yield Fund and USDC Yield Fund, paired with a fee of about 0.5%. So what do these funds track, and who do you see buying into them?
So as you know, at Securitize, we specialize on issuing and managing digital asset securities. So these are digital assets on the blockchain that represent securities, and therefore give, let's say, traditional investors or people that are not familiar directly with cryptocurrencies as a way to purchase, digital assets in a traditional way, like they're purchasing securities. And as you know, the last couple of years, in the world of crypto, there's been a tremendous movement around, DeFi and yield generation strategies, lending and borrowing, etc. And we started observing every time we talk to, let's say, traditional institutional investors that, people couldn't get their head around about how to actually participate there. If you want to participate on a DeFi protocol, you need to have MetaMask and connect it with your wallet there and, contribute to a pool and things that are, super easy for somebody in the crypto space, but super complicated and perceived as risky for people coming from the traditional finance world. So what we have done is, partnered with 2 of the, predominant lending companies in the space, Genesis Trading and Anchorage, to be able to create funds that, people can purchase into the funds in a traditional way with digital asset securities and place them in the investment retirement accounts if they wanted to use their normal, brokers, etc. And those funds, what they do is they actually are contain a yield generating strategy. One of them is Bitcoin denominated, and therefore you get exposure on Bitcoin, but we provide a 2% annual yield back on Bitcoin. So your Bitcoin, actually, the amount of Bitcoin that the fund contains, grows 2% over the year. And the second one is in a stable coin yield generating fund that is denominated in USDC and produces a yield of 6 to 8% annually. So you don't have any price movement exposures, but you get a higher yield. And in the world of finance these days, being able to get a 6 to 8% yield is like unheard of. While it's very common in the crypto side of things, it's very unusual, especially today with low interest rates, etc. So we felt that this was a very good way for institutional investors to get exposed to the yields that you can generate on DeFi, and at the same time start learning about digital asset securities and start participating.
Institutional investors. Who do you see as buying into them? Is it mainly institutional, or what proportion is it institutional compared to retail investors or individual investors?
Yeah, so the funds will not be available for retail investors at the beginning. We're going to go for accredited investors and qualified investors. We do see individuals participating. I have a lot of friends, people we know that, when you tell them that you can, purchase USDC and deposit it in either a DeFi or a CeFi pool and get a yield, annual yield, they're like fascinated about it, but they will not actually do it themselves. So we do see definitely not just like high-end institutionals, but also high net worth individual, family offices, accredited investors, etc., participating. What percentage is going to come? I don't know. We're launching the funds today. We expect that there will be participation across all these type of investors, but I don't know exactly how percentage of each one will be.
If you got into the retail space, it sounds like you would probably run into some sort of regulatory friction, right? Because it sounds a little, just in the sense that, the SEC has been so nervous about approving an ETF. Is that correct? I imagine like allowing retail investors to access this would not be easy from a regulatory point of view.
Yeah, so it's actually doable. So if you look at the other funds that are there that just go long on Bitcoin and charge you a 2% fee, which is worst value proposition in our opinion, those actually got registered with the regulators and they're offered for retail. We decided not to do it for retail at the beginning because obviously to file to be able to sell to retail, it takes a while and it's a regulatory process that you have to go through. It's totally doable and we're planning on doing it in the future. We just didn't want to wait to be able to launch this first and then also get a sense of the appetite of the market for this type of funds before we go and invest the time and the money on making it available for retail.
Carlos, good seeing you again. How do you take the assets and deploy them? And what are the methods by which you earn those yields?
So we are have partnered, as I mentioned, with Genesis Trading and with Anchorage. They have big lending desks that they regularly lend and borrow crypto, and then basically we manage the fund. We get the inflow of the money into the fund in fiat currency, and then convert it into either USDC or Bitcoin, and then lending to them so they can actually generate the yield on their end, and then provide the yield back to the fund.
So now, are you worried that if your fund gets big enough, for instance, or if enough funds get into this, that it could end up distorting prices or at least changing prices and lowering that yield?
Well, so yes, obviously, companies like Anchorage and Genesis Trading, the reasons we chose them is because they're very well-known regulated entities that are also very, very large. Genesis in particular has, trades billions and billions of crypto. So we don't think that the size of our funds will actually impact that initially. Obviously, if it gets super big, then it could create a problem because there might not be enough people on the other side trying to borrow at a higher price, right? But we think that these yields or similar ones can be sustainable over a long period of time without us distorting the market.
So your target audience, you said, was institutional. Are they specifically digital asset managers? And if that's the case, what's to stop them from, for instance, going out and getting that yield themselves? Why securitize and not themselves?
Well, so we basically provide them a simple way of doing it, right? With a very low fee. We're going to charge the fund, the fee structure of the fund is super low, 0.5%. Yes, you could do that. It has taken us months to put the fund structure in place, get the contractual relationship with, Anchorage and Genesis and figure out the internal process about how to do it. So I don't think that somebody, unless they're planning on doing something super huge and getting a huge volume, they will go through this process to just avoid paying a 0.5% fee, right? And they're buying also from a regulated entity. As you know, Securitize is a registered transfer agent with the SEC, which is our transfer agent manages our own funds. We also have, purchase broker dealer and an ATS, which is a member of FINRA and SEC regulated. So we give them enough, I think, comfort for a very low fee that it will not be worth their time to try to replicate this.
So what happens if you exceed the yields that you're basically offering here with a 2% on Bitcoin and 6 and change for USDC? What happens? Does the investor get that? Do you split it? Was there a split if it goes above those hurdle rates?
That's a good point. At the moment, what we're guaranteeing are those yields, and then if there is, if we see that the market provides higher yields, we certainly would like to figure out a way to pass that into the investors. Our counterpart on the lending side also needs to make money, so there is also a fee split with them, with Anchorage and Genesis Trading. But certainly, if we see that we can improve the quality of the fund by providing a higher yield, we'll definitely try to do it. Yeah.
This is a question that comes up with various guests. The whole idea of DeFi and of blockchain technology in general is for people to be able to sort of access this money directly, right? And so you are it basically playing the role of an intermediary in the sense that, like, because DeFi and because some of these products are difficult for investors to access, they kind of need an intermediary to sort of help, smooth along the process. Do you think this is something that will continue? Do you think there's a contradiction here? And do you think that at some point DeFi will be accessible enough that we won't need people in the middle to kind of ease the process?
Well, we're not doing this to make a lot of money. As you've seen, the fees are very low. We're doing this to basically extend the reach of this to our customers and to investors that are in our platform. So if they can do it themselves with DeFi, that'll be great. And I've been advising myself to some friends how they can actually go and open a Coinbase account and buy USDC and put it in I don't know, in BlockFi and Anchorage and some other place. Unfortunately, I think that we're still not there. And there is a lot of people that are not part of crypto because they need some sort of regulated way to access these products through regulated entities, and that's the role we want to play. Eventually, if they can do it themselves, go for it. We won't have no problem with that, and that will be that DeFi has matured enough for being accessible to everybody.
And Carlos, are you still involved in creating security tokens, or have you pivoted away from that due to the complications about the regulations around it?
Oh, no. Our main business is to create security tokens. We have more than 150 customers. We have a huge inflow of new customers in Q1. And this is just a way for us to actually stimulate the industry further by creating more security tokens. These will be, the funds will be issued as a digital asset security. And it's a way for us to be able to, even bring these more products, to investors to get them familiar with the space of security tokens and digital asset securities.
All right, Carlos, thanks for joining us and giving us an update on Securitize.
All right, thank you very much. Thanks for having me.
That was Carlos Domingo, CEO of Securitize, and that's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin for a full hour, and at 4:30 p.m. at Consensus, I'm moderating a keynote discussion with Noah Perlman of Gemini and Jess Turner of MasterCard. Coming up at 7 p.m. tonight is The Hash. You're watching CoinDesk TV.